We've done a survey of equity strategists, and there's not much upside seen for European stocks. Would you go along with that assessment, or are you more optimistic?
No, morning, Anna. Yeah, I think I would agree with much of that. We were significantly more bullish a few months back, several months back now, at the low back at the end of March. I think at that point, clearly, markets on our measures did look oversold. Valuations looked very attractive. And, of course, we were starting to see the policy response, both monetary and fiscal, come in. So at that point, I think, the upside appeared quite large for European equities. And indeed, we had a large upside to our index target. We actually think the market's maybe gone a little bit too far, so we've actually got some modest downside, maybe about 5%. But I think in the scheme of things, given how much markets are moving day to day, I would say we think we're kind of relatively neutrally valued right now for Europe in absolute terms. So that's the kind of headline. The problem is, when you look at it relative to other assets like bonds or maybe other equities like the US, then I think Europe still looks attractive. So that it's a difficult situation for investors right now.
Let me ask you about where Europe sits then in the mix with the others. You say if you look at it versus other assets, let's look at it versus other stocks. In terms of the year-to-date performance of Europe, Europe's still really underperforming the US, the Nasdaq now up 25% year-to-date, and of course the S&P 500 up 5% or just under. Euro Stoxx 50 down 12. Does this underperformance in Europe make sense to you? I was interested in a Bank of America survey that talked about the euro area being the most preferred for many international investors, with 33% overweight. And how do you tie those things together?
Yeah, I mean, maybe there is a little bit more enthusiasm for Europe in the last, but I think that's really in the last few weeks. As you pointed out with those performance stats year to date, Europe has lagged the sort of main index, has lagged the US main index by around about 15 percentage points, which is huge over this time period. And of course, a lot of that has been because of the sector mix. And a lot of the narrow leadership we've seen in the US has been because of the FANGs. It's been great performance by tech stocks or biotech stocks. And in Europe, we just don't have that kind of market cap. We're much heavier in banks, energy, autos, more of the value sectors, as it were. So I think that explains part of the gap. But I don't think investors are actually necessarily fully overweight Europe relative to the US. It may be that they're starting to think about moving. And indeed, if you look at the currency, the move in the euro against the dollar in the last few weeks, then maybe that's a sign of some assets shifting out of the US into Europe. So in a relative call, you could see some of that underperformance potentially catch up.